Wednesday, the 6th of June. Welcome everyone to Business Morning Live here on Channels Television. I am Busin Omofaye, and it's good to have you on the program with us for the next 1 hour. Let's get started with what is in the news this morning. Exotix Banks, the London-based investment bank, says Nigeria's bank has a reason to be positive. That's the latest report from this investment and research firm, talking about the favored names, the positive factors and the negative factors that will be driving Nigeria's banking industry. Exotix Capital says the favored names in the banking sector are just about 8 of them, but the top 2 are the ones you see right there on your TV screen. Zenith Bank, according to Exotix Capital's get buy rating and a target price, that's what TP stands for, of 31 naira 50 on the market. That's the story in there. Both names, according to Exotix, both UBA and Zenith, generate more or high return on equity. That's between 17 and 20%, and both banks are trading attractive multiples, and you can see less than 1.0 multiple price to book. That's 1.0 price to book and 5 times price to earnings. Then you have a 9% dividend yield on both lenders. Speaking specifically to Zenith Bank, which has a market cap of $2.261 billion and a target price of 31.50, according to Exotix Capital, that bank has a return on equity of 20.4%. Zenith Bank, according to Exotix Capital, has high capital ratios and a scope for funding cost improvements. For UBA, the lender says international operations of UBA across Africa and around the world should continue to drive the lender's growth and profitability. On the TICA, UBA comes second, according to Exotix Capital, in terms of market cap, $1.042 billion. Has a buy rating with a target price of 12 naira and a return on equity of 17.0%. Coming third on that list is Guarantee Bank Nigeria, $3.294 billion in market cap, has a hold rating and return on equity of 28.9%. Stanbic Bank in the 4th position, FBN Holdings in the 5th position, and at the top of the table were FCMB, which has a sell rating and a return on equity of 3.9%, and Fidelity also a sell rating of and return on equity of about 3.8%. That's there. But what are the positive sector drivers for the Nigeria's banking industry? This report says the higher oil prices that Nigeria is currently seeing around, we've seen $80 a barrel this year, and a very steady production would help Nigeria's banking sector, including the country's move to get a broader tax base under the Buhari's administration. Other point as positive drivers for the Nigeria's banking sector is improved non-performing loans in the oil and gas, power and real estate sectors, as well as the technology helping lower customer acquisition and transaction processing costs for Nigerian banks. That's the story. And of course, operating cost inflation, which is also valuations, I beg your pardon. Valuation depressed in broader frontier and small emerging markets context. A few of those positive sector drivers, a major of them, 4 of them, as you can see them there. But what are the negative sector drivers? Exotix Capital says there is what they call emerging markets investor risk aversion increasing, while the central bank continued to mop up liquidity in the financial system. Also, part of the negative sector drivers to watch out for is Nigeria's upcoming February 2019 general elections, limiting risk appetite for corporates, banks, and investors. That's also one of the negatives. Also, there is the falling margins for the banks. This is due to the lower yields on treasury bills we've seen around 9.9%. These are part of the stories out there. Then the financial statements for the banks are likely to move to exchange rate of 360 to US dollar this year. That's the outlook from Exotix Capital, and this could lift NPL and other provisioning needs for all Nigerian banks, as we see the rate moving from the central bank's position to what Exotix Capital says could be the exchange rate that will reflect in the financial statements of all banks in for 2018, 360 to $1. And of course, the operating cost inflation, which is subject to 2017 currency devaluation by the financial regulator. Let's move on to another set of the market where the Nigerian Mortgage Refinancing Company, or the NMRC, says it has completed Series 2 of 11 billion or 13.80, a coupon of its medium 400 billion naira medium-term note program. And that's the news this morning. Nigeria's Mortgage Refinancing Company was set up under the last administration to help Nigeria's refinancing program in the mortgage sector. According to news in this morning, the order book for these 11 billion naira offering was oversubscribed 200% by local investors, as PFAs, that's the pension fund administrators, account for over 70% of the investors who bid for the latest bond raising by the NMRC. The current Series 2 debt was priced at a spread of about 74 basis points above the FGN 15-year yield or bond yield of 13.06%. And that's take you technically to 13.8% that the NMRC is offering investors who bought that 11 billion naira bond. That bond was rated AAA by Global Credit Rating Company and Augusto Company. That's a Nigerian rating license rating agency. The bond is also guaranteed by the federal government of Nigeria. Also, how will the money be spent? The NMRC says the proceeds will go into refinancing of eligible mortgage loans originated by participating mortgage lending institutions or commercial lenders. The first offering by the NMRC was of 8 billion, a bit of a smaller amount of 14.9%, issued in July 2015, and which was later listed on FMDQ OTC Securities Exchange.